Good afternoon, traders. How we doing? And welcome back to Stock Market Movers, where we get through all the headlines that are out in the market and, of course, get to the expert opinions that you guys want to hear, get you the information that you're looking for. Well, today's show, we're going to talk a lot on all the earnings reports that came out. There's tons of information that's come out, but there's also a lot of Fed talk out there right now. We'll talk a little bit about the Fed talk. I know that we keep talking about this almost on a daily, but it's kind of funny because it's about Mary Daly, Fed president. So we'll talk all about that during the show. We'll also take a look at what happened right before the gates opened, right before 9:30 hit. We got something to hit the tape, and it shook up the market, and it looks like it's shaking up everything right now. We are getting a rally right now in the overall market. We'll have to go ahead and take a look. Will this rally continue? We'll take a look at the key takeaways for this week. We'll, of course, go through all the earnings report and Kathy buying the dip again. A little bit later on the show today at 1:45, we'll be having Matt Khors, market strategist and retail trading commentator, is going to be talking about the short report that came from the bear cave on Rumble. And you guys remember, we had him on talking about this. So this is the fun part about doing media and showing, like I've always talked about, both sides of the coin. Let's go ahead and find out what is going on in Rumble and why this short report just seemed to be like there wasn't much research put into it. But I'll let Matt Khors talk about that. Of course, I've been seeing the comments that he's been putting out on Twitter. We'll get to that at 1:45, but let's get right into the market and talk about stock market movers. I'm your host, Money Mitch, and let's see what's moving in the market today. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. What's going on, team? How we doing in this market? Where is the rally? It looks like we got ourselves a nice little push, and we're up there towards almost 372. And let's go ahead. Let's bring up the SPY before we get into the market. Now, of course, the SPY is pushing up there, but what happened? What was this spike here? Well, let's talk about the news, and we'll get into the Fed talk here. But definitely a nice little push there on the 375. Really held the VWAP area. You guys know we always talk about this area right here. VWAP held well. I was on live when we started really kind of holding up here. And I said it here on this 1127 candle. If we could hold the VWAP from that point on, we'd be looking good to the bullish tune. And there you see it back to the highs and above the highs as we're seeing definitely a nice push. Now, where is this all coming from? Well, let's talk a little bit about what's going on in the markets today. First thing we're going to talk about is none other than the Fed talk. And Fed talk, it seems like it just doesn't stop. I even said it today. I was like, man, can they just do their job versus just talking all the time? But then again, that's what I do, right? Talk all the time. But one thing that I'm definitely certain on is I'm trying to do my job in covering all the headlines and the market moving news for you guys out in the chat. So let's talk about what was said today in the Fed talk. Of course, Fed talk coming from Fed President Mary Daly, and she indicated during a Q&A at the University of California, she said that the Fed should be looking at reducing the pace of what has been a series of 75 percentage point rate hikes. Fed President Mary Daly says, starting to see slowing take hold. More tightening is needed. Also, need to avoid stopping tightening too early. She also stated that the slowing rate hikes should be considered at this point, and the data have not been cooperating. So it seems to me like she's back and forth here in these comments. But one thing to note, though, she is saying that reducing the pace of what has been seen from the 75 basis point hike rates. But then she says there that also need to avoid stopping tightening too early. Well, it seems like they're very back and forth. And what we have been seeing from the Fed is starting to kind of admit at least a little bit that they're seeing some slowing down in the economy, but we're not seeing the inflation talk that they talked about, right? They clearly told us that their mandate is inflation going to 2%. Has nothing to do with the hike rates, and at the pace that they're setting it. Now let's talk about what happened in this box here when you first saw this first spike in the morning. That coming from a Wall Street Journal report putting out an article this morning indicating that the central bank would be talking about the future pace of rate hikes. A part of me is here like, well, don't they always talk about the rate hikes? Wouldn't that be what's is going to be talked about at the meeting, the FOMC meeting in November? Wouldn't we always take an approach to taking a look to seeing if the rate is too fast? Doesn't seem to me like there was much there, but the fluff came out. And with that being said, you saw the market move. Now, the market's kind of buying in on this whole outlook that the chances are lower for the 75 basis points. How can we know that? Well, you look at the Fed Watch tool, right? You guys can literally just Google this Fed Watch tool and take a look at it yourself. Well, the probability for a 75 basis point hike in December fell from 75.4% to 57.4% following the journal's story. Is this a correct outlook? Personally, I think they're still on the 75 basis points. I almost think it's a given. But as you clearly see, now they're starting to question it. And with that, we're getting this rally. I personally don't think that they're going to go away from 75 basis points in both, right? I mean, we're going to keep raising until we get to a certain point where we're in a restrictive phase and really start trying to affect on the demand to hit inflation. Right now, I think this is kind of more of a fluff. So this could be a rip to sell. But as you guys can see, the rip is here, and we'll see if it can continue gaining on the day. Take a look at the daily outlook as we come back here. Of course, we still have room to run. It could get all the way up to 374, 376 today. I don't think the 378 is in play, but maybe on a good reports coming next week, maybe we can start working our way towards that 380. So it looks like we are finding some bottoming price around the 363s, which was right around the kind of the 50% retracement. We talk about these levels all the time, especially on pre-market prep, that it's holding the 50% retracement almost to the key, and it held it really well today. You guys can see around this 362.45, holding that retracement well. Now we're going to see if we can continue through the next level up through the 374 and getting through the 378. Would love to hear what you guys think about the Fed talk. It seems to me like they're definitely back and forth. Wall Street Journal reporting that they would be talking about the future pace of rate hikes. Are you guys in the camp that this is the bottom? Would love to hear it in the chat. All right, it's good to see you guys in the chat. Manny, Brian, what's going on out there? Easy, Beach Bum. It's good to see you guys in the chat. Hit the like. And if you're new to the show, say hello. That's what it's all about. All right, let's get out of the Fed talk. And of course, that article that came out this morning. Don't want to be stuck on this all day, but there's other also macro news that I think is an important outlook to keep in mind. And the Biden administration putting out news that there could be potentially more expert curves. This is not what I feel that we need, but it definitely seems like where the trend is heading. So the Biden administration is considering the possibility of more expert curves. And where would these kind of take place? Well, these would take place in emerging computing technologies like quantum computing, artificial intelligence. And this was reported by Bloomberg citing sources. So one of the things that I would say is truly be careful, Because if we're going to continue to have this battle with China, will there have some retaliation? I think they will. They won't allow us to just completely take the technology sector and completely just take the grasp back. They're going to find some way to fight back. Now, the question is, will this affect those technology stocks? It's the reason why I've been waving my red flag for moments like this. Talk like this is not what I want to be seeing, at least if I'm a bull in technology. I think this is an actual bearish outlook for the long run because it's going to take a long time for us to take advantage of having these technologies here in the US. And also, if we're in the battle with China to try to get into these higher tensions, these trade wars, it seems like it's going to have a negative effect in the long run because, of course, we can't manufacture what they can do in China here in the US at the same cost. We'll see what happens. All right, let's get out of those talk. Of course, I did catch something that was interesting there. I did see that sanctions are so stringent right now that any U.S. citizen working in a Chinese semiconductor industry needs to quit their job or be at risk of losing the U.S. citizenship. So, hey, I don't know if you work for a Chinese semiconductor company, but if you do, you might want to go ahead and take a deeper look. All right, let's get out of the overall market. We're going to start talking about the key takeaways this week. Like always, we want to kind of review the action of the week. This week, we got, of course, Netflix had good subscribers, good earnings, and look at it. Getting through that level, I was talking about it earlier today. Would we get through that 278.38, 279.30, and we're up to 283 into the gap zone as you see Netflix take off, pushing through, held a little bit there, went back close to the VWAP, and really took that next leg. Not a bad week here for Netflix at all. Let's talk about Tesla now. Tesla getting hit on earnings and stating that there's no change in production for recession. Recession comes or recession doesn't. No change in production. Tesla bouncing back. We really want to see it. If you're a bull in Tesla, you want to see it get back here towards the spike that it had when the earnings came out. That was towards 215. Can it get back above the 215 today? We'll have to wait and see. Of course, there was some more news. We got initial jobless claims to come in light, and that's not going to help the economy because overall, what has the Fed been saying? Well, the Fed has been saying that they're going to continue raising rates and pushing into unemployment. Well, today you could see maybe Fed President Mary Daly definitely changing her tune a little bit. But I think overall, this is still the mandate for the Fed is, of course, getting inflation down, even if it's at the cost of a labor market starting to deteriorate. We'll see what happens there. President Joe Biden, of course, announcing $2.8 billion in grants for battery manufacturing companies and materials. I thought that was getting up some of the stocks today, like lithium stocks, getting a nice little lift here. Also, for a while there, we saw MVST, which is the battery play, get some lift, and it's continued to move. So if you're looking for certain plays like that, just keep it in mind. And you can see here what a spike in volume that's caused and a continued movement in Microvast, a battery manufacturer. We'll see what happens there. Of course, Liz Truss resigned as UK Prime Minister in just 44 days. That was definitely something that was surprising to me. Did not expect to see the Prime Minister resign in 44 days. Just imagine. And I said this yesterday, just imagine if there were happen here in the US where the president was resigning 44 days after an election. What would that cause? Definitely would cause some shakeup. And I can imagine how it is in England. A lot of shakeup going on, uncertainty, financial crisis looming. Of course, we've heard from the US Bank of England how the gilts were kind of moving with the pension funds being on brink of disaster. It seems like they only had about an hour to kind of readjust things. We'll see what happens there in the situation in England. It doesn't look good. We also got continued Apple warnings on the iPhone. I think we need to continue to watch to see what happens on Apple's earning call. Will they give us some insight into that production of iPhones, or will they kind of keep it under wraps? That's one thing that they've done in the past before. They don't give us those numbers. So it feels like to me like they're going to definitely try to keep this under wraps. And they're trying to find out who's giving these leaks right now in Apple, because that's not what you want to be seeing right now in Apple. They definitely came down, but turning a little bit around. If it can get to 150, I'll start feeling a little bit of bullish again for Apple. We'll see what happens there. All right, catching up with the chat, over 100 of you guys. So do me the favor, guys, hit the thumbs up. We'll see what else is going in the market, but the thumbs up just shows me that you guys are enjoying being here for the show today. Looks like we got some classics joining us. I always love the loyal listeners here. Definitely looks like Manny coming in the house. Michael, what's up out there? Michael's good to see you. Jay Rice here. And OP, what's going on out there? We'll see what else is going on. And not the same constitution in the UK, Mitch. I agree. But I'll tell you one thing. That would scare me. We'll see what happens. And yeah, you shouldn't have leveraged pensions. I agree. I don't think that should be a move that pensions are making, because what has to come and happen is they need to come and get rescued, right? Well, you can see they had to step in here, and it caused some issues. All right, let's get into the other market headlines. Let's go towards the next one. Of course, Snapchat having their earnings report, and it got snapped, that's for sure. Now it is trying to come back above the VWAP, and this is one of my favorite strategies. If you guys have ever heard me mention the VWAP fade, and that's so when you get a hard down action here, towards the bell, you're going to look for that bounce back towards the VWAP and then a fade right back through the lows. Exactly what you got here out the gates there for Snap. Looks like it's still trying to do the third fade, where it can fade one more time through that 740. We'll see if it can continue, but definitely Snap got ripped today. And a lot of that was surprising with the EPS beat, but where they went wrong is when you start seeing their Q4 expectations and the revenue growth that they're at. So Snap adjusted EPS coming in here at 8 cents, beating the loss of 1 cent estimate. Sales at 1.13 billion, beating the 1.2 billion estimate. Snap will not provide Q4 expectations, as Snap's third quarter revenue grew 6% year over year, the first time that it's dipped in single digits. They also stated that U.S. total time watching content decreased 5% year over year. They tried to move things a little bit back with the $500 million buyback, and also expected to incur the remaining of the transition costs associated with reprioritization in Q4, and estimates costs of $20 million to $35 million, which will present some headwind for those net incomes going into Q4. Snap definitely got hit hard. Let's see how Meta is trading today. Meta got hit also in the action, but at least bouncing back a little bit there in Meta. Let's take a look at the Goog. Goog also got hit hard overnight with that, but bouncing back a little bit here and at least holding the gains. Snap is the one that's really weak. Let's see if Pinterest also got weak. Yeah, it also got weak. So Snap and Pinterest are the ones that look the weakest right now. They're not wanting to hold above the VWAP. At least Meta and Google are bouncing back, and these are kind of relationships that move with Snap. So interesting to see Meta and Google into the green, but it looks like Pinterest and Snap can't get back right now. All right, let's go to the next one when we get to Verizon Communications. Let's go. Let's see what's going on here. Of course, this one was going up with the AT&T news that came out yesterday with their earnings, but Verizon could not get the bounce today. Faded off there, faded off. And I think that you'll see the same kind of with AT&T. Oh, surprising. Actually held. So it's a big surprising move here. I didn't even take a look at the chart. Surprise. A lot of times I can get it right without even looking. And here, there's a surprise. The surprise is AT&T is up with the Verizon numbers that are actually dragging Verizon down here. Wonder how T-Mobile's doing. T-Mobile kind of sideways here. We'll see what happens here. AT&T getting some good lift today, even though Verizon got hit hard. Verizon earnings per share at 132, beating the 129 estimate. They were at 34.2 billion, beating the 33.78 billion estimate. So it really wasn't that bad of an earnings report here for Verizon, but it doesn't look like they're getting any kind of love in the industry. All right, let's keep going. Let's go to the next one, which is all about, of course, consumer concern, which is AXP, American Express. Who has an American Express card out there? Definitely throw up a 1 if you're an American Express fan. Right now, I'm kind of I use a Capital One, not an Express. I don't think I've had an Express card before, but who knows? Maybe I get one in the future. Hopefully not, though. Right? Or hopefully I don't need it. American Express Q3 EPS at $2.47, beating the $2.41 estimate. Sales at $13.56 billion, beating the $13.50 billion estimate. American Express third quarter revenue increased 24% to $13.6 billion. American Express says that based on the year-to-date performance, now expects to be above the original full-year EPS guidance of $9.25 to a high end of $9.65. So not a bad outlook, and that's why I think you're seeing it bounce back. But it did get hit hard on the news. So I think we need to see it get back there towards kind of the open yesterday or the close yesterday, which is around the 143.18 before we get bullish. But it wasn't the worst report. It tried to hold on here. We'll see if it can actually close the day towards the upside, because if it breaks down through the 136, going towards the 132, I think you'll get continued downside action. We'll see what happens right now. It is holding on and doesn't look good on the daily, but right now, back above the VWAP. All right, what's going on in the chat? How we doing out there? Looks like some people have the American Express. The card is heavy as hell. That's how you check out the good ones. I've heard of the Goldman Sachs Apple card also being really thick, right? Really thick card. Some people like to have that thick feeling of a card in there. Shows that I got more money in the card, All right, let's keep going. We'll see what else is moving out there. DXY, easy talking about. Let me take a quick look at DXY. What's going on there? Looks like the dollar is still coming down here. Will it catch the bounce? We'll see what else is going out there. But remember, I talked about it. Would the dollar get up there towards the 114.10? That was the breakout level. This morning around 8:30, we rejected around the 113.88 for DXY. And I think that's an important price level to watch now. I don't have the chart here, so I'm not going to go into it on my TC, but definitely keep your eyes on that DXY. I think it's been a good read to look for it. If it's going to break through the 114.10, then we could probably get towards that next level down in the SPY. But if this keeps breaking down and let's say cuts through the 110 level in the DXY, that's when I really do think that we'll start getting that nice rally up. Will this be kind of a bottoming rally? No, I think that, in the long run, we could see a Q4 rally and then it kind of taper off into next year. But we'll see what happens here. Kevin, not the best day there. It was spiking in the morning and then came back down. And you could see it also in the overall market as we were coming down in the market. And then when the journal report hit, that's what started swinging this back. And you saw it get hit also. All right, we'll see what else is going on. I do see Michael talking about Unity. We'll talk about Unity coming up in our what was hot and what was not today. There was one more earnings stock that I want to get into, and then we can go ahead and do what was hot and what was not. Sorry about that, guys. All right, let's go to Slumber J or Slumber Burger, the way I like to call it, the Slumburger. All right, let's go to SLB. And the SLB was one of the stocks this morning that I gave an outlook on. And what I wanted to do was kind of give you the relationship. And so a lot of the times Dennis helps out with this outlook, but today he wasn't there. I said SLB. All right. Well, I know I'm going to probably be looking for in a good report is looking for Halliburton to get a nice little lift. And that's exactly what happened this morning. If you were on pre-market prep, you heard this outlook, and I hope that someone out there was able to make their investment decision and take advantage of the outlook in Schlumberger. And let's talk about their earnings coming in here at an EPS of 63 cents, beating the 56-cent estimate. Sales at 7.47 billion, beating the 7.15 billion estimate. They also announced on October 20th that Schlumberger's board of directors approved a quarterly cash dividend of about 17 cents per share from outstanding common stock, payable on January 12th and an ex-dividend date of December 7th. So you want to go ahead and take a look at SLB with this nice little takeoff. Take a look at the daily, really pushing through the high. Big day move there for SLB. And I thought, well, maybe some of the laggard oil plays would get that push today. Halliburton getting a nice push there. MPC was one I was going to take a look at to get that next push. It's getting a little bit of a push. We'll talk about some other oil plays coming up, but definitely not a bad day there for Schlumberger today. Really nice push, about 9% on the day. One of the leading stocks in the S&P 500 on the day, actually the leading S&P 500 stock. And of course, if you were there on pre-market prep, you would have heard about the not the next leading stock, but Halliburton having a great day today, up about almost 6%. All right, let's go into what was hot and what was not, and then we'll get back to the last earnings report and other talk that's going in the market. Like always, do me a favor if you guys are enjoying the show, enjoying the action, keeping through the topics, hit the thumbs up, and I'll keep rolling. Let's get towards the next action, which is going to be into what was hot and what was not. This is the segment where we go into the sectors and the industries that are moving so that, of course, we can catch the rotation. Let's go ahead and take a look. What was having the best day today? Basic materials having a hell of a day. You can see here from the industries, all in the green. What does this show us when all the industries are in the green in a sector? Well, if you're looking for signals of relative strength, that's an easy one to look for. And what does this help us in? Well, the truth is that when you're in a sector and all the industries are going up, it's going to be very easy to try to get one of these stocks to get you into the green. And so that's why I try to find the rotation, right? So let's go to the rotation here. Basic materials. Copper is leading the day. Having a great day is FCX. FCX had a great day yesterday also. Wanted to see if this would really start getting it going. We talked about, would it get through the 30.60 high? Today, we got right through that. We got a little push there at the 30.15, a little pullback, but straight up towards that 31.60. Not a bad move there in FCX today, and that's a copper play. What are some other copper plays that you guys can keep in mind for maybe some laggard style play? Well, keep in mind here this SCCO. I do like the way this one trades. Has some nice bottoming action, sideways action right off of this 46.50s. Seems like we were holding. We've made a couple of runs here. Now I'm going to look for this to kind of take this out and go towards the upside. We'll see what happens there. SCCO, Southern Copper Corp. Will it get back? And through the 50 is going to be a good sign for it to start coming back towards 52, 54, maybe making a run there towards the 200-day moving average. Not a bad stock here. SCCO moving with FCX. Silver having a good day, and that shows me the dollar struggling, right? And so steel's the next one here that I wanted to talk about. Steel Dynamics, beautiful move today. I don't know if you guys caught the steel move, but definitely not a bad move here. Getting some nice push on Steel Dynamics. Can't go wrong there. It had a really nice move. And I saw that, I started looking at X. All right, X looking good here also. It was near the high around 21. I was looking at Cleveland Cliff. All right, near the high and continuing to push. So then what did I do? Well, I looked for the leader laggard trade. I talk about this all the time. What is the leader laggard trade? When you're looking for a leader in the industry to really drive the industry forward, and you're seeing the other stocks, a lot of the times we're going to be looking for something like the leader breaking through the resistance, giving us that bullish pattern, and then looking for the laggard that's off the support, finding some bounce or near maybe the VWAP stuck in the middle and looking for that bounce to take off. So one of the stocks that I found with this outlook was NUE. NUE was right around here, around the 131. And so I took my shot, was able to make some money on NUE. And a lot of this was based on what? A lot of this was based on trying to find the leader and the laggard style trade. Not a bad day there in steel. Industrial metals and minerals getting some lift today. Definitely keep these on your radar. We've talked about PLL for a while now, how it's been setting up for a nice move. With the Biden administration news that came out this week, I'm definitely keeping this one on my radar. You guys can see here, we've been watching this for some time. We updated this on the 19th, but the original creation of this trend line was on September 6th. Let's see if this can really start closing above the 60, moving towards it wants a break towards the 68 and 70. Not a bad one to keep on your radar, PLL. If it can get through 70, we're going to be looking really good going into the winter months. LAC also having a really nice day. I was liking this chart for kind of a swing trade through 24.50. Now you're seeing it up there to 25.87. Really good day there for Lithium Americas, getting some nice push. These aren't the only ones. Of course, you guys can keep in mind LTHM. I even talked about this one when I was on with Zunaid on All Access, and that was before 11:15. It was just here at 28.85. Look at the recent takeoff. That already is a 6% move from there. Overall, almost a 9% move on the day, 8.55%. MP is one that I'll be finding, trying to catch off the bottom. You can see it bouncing back. Will this one make its way back here towards the 50? That's going to be the first move towards 32. And these are moving, of course, based off of lithium talk. What else is out there, guys? Ahmad says he works at Slumber Burger. Well, get me a burger there. They have to have some good burgers, right? We'll see what else is out there, man. Not just messing with you, but if you really do work for the company, it's pretty dope, actually. All right, let's keep going. We'll take a look at what else is moving in the market. Jay talking about NUE. Missed yesterday. They bought it hard today. Yeah, definitely. Got some good push there. All right, let's go ahead and take a look at some other areas, right? Industrials also getting a little bit of a lift. Where did this go well? Farming, heavy, and construction. I've talked about Deere, and it's starting to set up for an up move. And I think that if you do see Deere break out through this level right here, and I'm liking this setup, right? I really do like this setup. I've talked about this even here on Stock Market Movers. Earlier this week, industrials kind of led, and that's why I was talking about it. But Caterpillar, I talked about the leader laggard style trade here with DE and Caterpillar. You can see Caterpillar trying to get off the support. You can see DE. What is it trying to do? Trying to get through the resistance. This is how I approach that leader laggard style trade. I look for the leader. Is it breaking through the resistance? Is there some strength? Do we have some volume on this move? Because, of course, we want to see some volume as we get through big, important levels. You can see the volume actually has been declining into the move. We want to see a volume spike as we get through that move. One thing that does show us, at least this is not the worst, is that the average true range is starting to spike upwards. So right now, about an average true range about 11.53. That shows us volatility increasing into the move. Doesn't mean that it's going to rip, but it does show volatility increasing into the move, which is a good sign. All right, let's keep going. The burgers are kind of greasy, says JRP. I actually like that joke, man. I'll keep it going, but good joke there. Let's take a look. What else is moving? Energy, of course, getting that lift. I put this box where? Created this on October 5th. We were going to take a look. Where are we going to start pushing in the sector? And we've continued to push since that 5th. Of course, where was the 5th? I'll show you guys right now. That was right around here. That was on this date right here. When we were getting through, we pulled back for a couple of days, and now we're really starting to push. You can take a look at some of these stocks, of course, like XOM, getting through the high there from June 8th. And a lot of people knocked me for these oil stocks outlook that I thought they could get back to the highs. And there you see it. Finally, ExxonMobil coming through and breaking through there. But it took a while. I will say that. And on this downturn, I didn't take part in the recent rally. So am I right? Nah, not necessarily saying I'm right here. But I will say that finally the oil trade has truly taken off. But is that truly a good thing? I don't know. This shows me that we could see eventually maybe a spike in the price of crude. And that, of course, would keep inflation high. All right, let's keep going. We'll see what else is going out in the market. Energy, we just talked about. Financial services, not having a bad day today. Finally getting a little bit of a bounce back. Let's see if some of these bigger names actually caught the bounce with it. Let's put some high cap names here. You can see Visa getting a little bit of a bounce back. JPM, after 2 days pulling back, getting a nice little spike there. Let's take a look at like a Bank of America. Very similar chart, 2-day pullback, now catching the bid. How's Goldman Sachs? There you see it. 2 sideways day, made up a lot of the shadow. Didn't get completely filled there, but really pushed back right towards their Tuesday high, of course, when they release their earnings. All right, we'll see what else is going on in the banks. You got BlackRock getting a little move, Citigroup getting a little push up. We'll see what happens with those. What was down today? Well, necessarily nothing was down today. The only thing that was kind of not having the big breakout was communication services. And a big part of that was just on Verizon weighing down the industry overall, because Verizon down about 4.95%, almost 5% on the day. We'll see if it can actually start holding above the VWAP. Real estate right behind that. Definitely real estate mortgages getting more expensive. So we're not going to stress too much about the real estate industry, but you can see it. I saw rates going up to almost 7% for mortgages. Not what you want to be seeing if you're trying to buy a house. I've already said it. I was like, well, I ain't buying a house at least until these rates come down. So it might take a while to get those rates to come down. So I'm just going to be on the sideline right now and not going to be trying to buy a house in this environment. We'll see what else is going on. Lending Tree fell off the map. Oh, I'm sure they did. I forgot what the ticker was in Lending Tree. If you want easy, you could throw it up. I'll take a look. All right, let's get back into the action. There's a couple more headlines that I want to get through, and then we'll go ahead and get to our interview at 1:45, where we'll get into it with Matt Khors, market strategist and retail trading commentator. One thing that I want to go ahead and talk about is we're going to be talking about the short report on Rumble. So stick around, especially if you're a Rumble fan. All right, we'll take a look at Boston beer. It seems like Sam's was definitely getting a lift today into the market, and it's continuing. Not a bad day, not a bad rip there for Samuel Adams. Of course, Boston beer getting some push there. Looks like it's getting hoppy. You get it? Getting hoppy here, Sam's. Definitely going to have to pick up in Oktoberfest. It looks like it, because Sam's is getting a little bit of a push here. Let's talk about their earnings and how they came in here. Boston Beer EPS at $3.82, beating the $3.49. Sales at $596.45 million, beating the $574.39 million estimate. Boston sees full year 22 adjusted EPS at $7 to $11. A little bit of a wide range there, showing me what they're probably not being able to really kind of consider their costs right now. Probably still battling a little bit of supply chain controls. But you can see it. The industry kind of loved it today. And it wasn't only Sam's. We'll take a look at some other stocks here. But look at that big candle here. Some people like to call that one, we won't get into it, kind of candle. But you can see that. Nice little breakout there. Let's talk about some other kind of beverages type of stocks here. I'll take a look here. You can see beverages, wineries, and distilleries. Also, I was taking a look here at the brewers. You could see here, of course, Sam, 18% day. What a rip. But Tap was one that I was looking at today, and I was wondering, this one doesn't look too bad off the VWAP, seeing Sam break out like that. Molson Khors Brewing, of course, here, getting some lift. And you guys can been looking at Bud, Anheuser-Busch getting some lift today. And this is how I sometimes get that leader to laggard style trade. A leader ripping, we look for something that's off support, like this was right here, ABEV. You could have gone after that one. Tap was the same thing. It was off support, but Sam was staying strong. So this is an easy way to kind of catch that leader laggard style trade. And I could even show you how that would look here. So let's just take a quick little approach, and then we'll be getting into our interview coming up. Sam, right? So Sam, right around this time when we were getting through here, was what? Near the high of the range. I've talked about it earlier today. When the stocks, a leader is near the high end of the range, you're looking for it to take out the high of the day, right? Continue the trend. And then you can look to try to catch like a stock like Tap off of the support and look for the leader just to continue the move. And that's exactly what you got here. You were right around this high. And what happens? Well, the stock puts a big candle here right when you start seeing Tap turn around. And right when you get through that high, look how Tap starts really taking off here on the right-hand side. Those are the type of style trades that I love catching. They're called the leader to laggard style. And the most important thing is knowing that there's correlation between the two names. And then also, of course, that the leader is getting a big push. A lot of times we're looking for a catalyst to be that driver. And in this case, earnings stock pushing Sam's. Could have caught Tap also. Been talking about it today a lot, the leader laggard style trade. I wanted to show you guys that today because it's so important to catch it, especially when you can see it in different areas, not just, let's say, Boston Beer. I talked about it with Slumber J and also Halliburton, right, in different areas, like I did also with the steel trade today, seeing X give a nice push, Cleveland Cliff push, Steel Dynamics push. Well, it went after Nucor. Very simple way that you guys can also be looking at trading relationships, right? And what does this help us? Is trading with the stocks that are in trend. That's what I want to be trading. That's why I go over what was hot and what was not, because the rotation is so important. All right, let's get out of that talk. I hope that you guys enjoyed a little education on that side. And normally try to add a little bit extra. We normally have like 2 guests today. So I just wanted to give you guys a little extra value by talking about that style trade. Let's get out of my charts. I'm excited to get into our interview today. So do me a favor, chat, hit the thumbs up, sound the alarm. Matt Khors is coming on next. All right, let's go ahead. Let's bring on Matt Khors today. How we doing?
Hey, I'm doing well. How are you doing today? Ready for the weekend? TGIF?
I got to get one of those true professional.
Yeah.
I'm liking it. I'm liking
it. Definitely just screams professionalism. This is the common fashion on Wall Street these days, as you know.
What the duck? You know what I mean? I always have my sup ducks around here. So I don't know if you know the sup ducks, but I got my ducks. I got my ducks.
Awesome.
What's up, duck?
I'm going to need to get one of those. We'll put
Definitely,
it on the mic.
Definitely. You got to check those out. I've met the project leader. We have him on Roadmap all the time. He's one of my favorite artists. So check him out.
All right. Definitely will.
All right, let's get into it. Let's first talk about Rumble. I don't want to first get into the short report. I want to get you more your perspective because you really got to have more of the insight into why Rumble was probably created in the first place. So tell us a little bit about why you feel Rumble will truly be a game-changing platform.
So from an anecdotal standpoint, it's kind of actually a funny story of how I even got into Rumble. At first, it was very, very terrifying. So what happened was when the whole AMC and GME craziness was like near its peak craziness, It was the first time my YouTube channel got terminated, and I was considered harmful and dangerous for whatever reason, which is crazy because I just talk about stocks. And they reached out to me, and I had never heard of Rumble, which I'm sure many of your viewers right now, you're like, okay, what is Rumble? And just so you know, it's basically competitor to YouTube. And from there, they reached out to me, and I didn't think much of it. And then I got terminated again. And then at that point, the CEO, Mr. Chris Pavlovsky, reached out to me. He's like, we seriously need to talk. I was like, okay, what is this about? And it was explained to me in the way where, hey, we are another video sharing platform like YouTube or Twitch or Facebook, except we try to apply our rules or terms of service fairly and equally to all creators and all users. And if things in the event, if they go awry, there's actually a person you can reach out to. There's an email system. I'm sure you've been through this yourself on YouTube. It's very tough. And as a content creator, to not have someone on the other side reciprocating as if you're a human, it's tough when you don't have that. So many people looking it up right now, if you find things online, it might be something along the lines of hyper conservative. Historically, if you look at it, well, it makes sense the way it played out because on other forms of social media, such as whatever, TikTok, Instagram, YouTube, those were the people getting banned. So they ended up on a place where like they could actually still post their content. But recently, especially after making their public debut through a SPAC from CFVI was the SPAC holder, the blank check company. Now with extra funding, they're starting to get all types of people. If you go to Rumble, you're going to see news, podcasts, viral videos of cats and dogs, finance. So it's one of these things where it is now getting into, I guess the highest level I could explain is like general forms of content. So it still has political, but news and gaming, and the list goes on and on and on. So it's kind of the new kid on the block. And their North Star of sorts is literally just freedom of speech. As long as you are staying within their terms of service, you can do what you want, opposed to maybe some political biases from like the big tech overlords. So for me, that's why I'm a creator on it. That's why I really enjoy it. And just anecdotally, when your whole platform's ripped out from under you, like it's a punch in the gut. I mean, as you know, Mitch, you spend years working on content, refining your voice, understanding how to connect over the interwebs, and then for that all just to disappear and then have no one to ask what's going on. The fact that there's a platform that like actually cares about creators, you know, the thing that actually makes the platform like functional, it was a refreshing breath of air for me, at least.
Definitely, as someone that's on YouTube. I mean, we're on YouTube right now, right? And I mean,
Mm.
at the end of the day, one thing that we want to be able to do is at least just give a perspective, right? I mean, we can use disclaimers to kind of go ahead and state that, like we do on our show right here, this isn't financial advice, this is educational purposes only. And what I'm here for is to give a perspective. And just like I think
Mm.
that's what you are doing on YouTube, and to be kind of canceled or cut off, well, then that starts being kind of feeling like we're really kind of restricting the content that's being released. And it seems like Rumble went ahead and said, well, if you're going to restrict this type of content, we have a home for it. And it
Mm.
seems like they're being able to pull a lot of creators that have gotten in conflicts with YouTube. And you said it very well there that I mean, we've gone into an issue before, whether it be a copyright or something with YouTube, and it seems like you can't get an answer. Like it
Yeah.
doesn't even matter who you email, who you know, unless you are getting straight to the top of Google. It doesn't look like you're going to get a real serious answer from YouTube, and it's
100%. They just send
it's
you
tough.
that links to the FAQ. They're like, maybe this will, and you're like,
Yeah,
dude, this is
this
crazy.
help doc, you know.
Yeah. And like in our positions, obviously there are people on YouTube who are far more dominant than you and I are put together,
Yeah.
multiplied by 10. And the thing that I found out is a lot of them still don't even have a connection. I was like, okay, I get it. There's like, we're kind of a small fish in this overall ocean. But recently, very popular among the Gen Z crowd, Steve Will Do It got kicked off of YouTube. And I had the opportunity to speak with him. I was like, oh, like, what did YouTube speak to you? Thinking with 4 million subscribers, they probably talked to you. He's like, oh, no, nothing. Like, no contact. A while ago, I think maybe a year ago, same thing with Graham Stephan. He was about to get kicked because like of the way he responds to contents. They thought he was a bot, like these comments on his content, I should say. And same thing. And he's at 4 million as well in the finance sector. And still there's no human to speak to. So are there some people at the tippity top of content creation that have that personal relationship? I would assume so, but it's crazy that there's people with millions of subscribers who are treated the exact same way we are.
Yeah, I mean, the only thing that we want to at least hear is a true answer, right? Why are you taking why are you taking this down, right? I mean, I think that's what all creators are going to want, is at least some true transparency, not just, oh, this is the idea that we thought of and we're going to tell you that it's this.
Mhm.
So, let's start getting into a little bit more of the nitty-gritty, and I can't do the gritty yet, so we won't do too much there, but let's talk a little bit about the short report that came out.
Mm.
And this was put out by Edwin Dorsey and the Bear Cave. Of course, you have already stated some points that you have made in Twitter about how easy it was to disprove the Substack statements, but I'll give you the floor. What
Okay,
did you see out
so
there?
high level situation. There is a Substack, the Bear Cave. I believe it's around 25,000 self identified short sellers, and they had this write up about Rumble. And I think it's one of these things where they were just targeting SPACs because recently in the whole cohort, SPACs have not been performing well. I would argue that Rumble is an outlier in this scenario, but I understand how it came across really their table. But when you read into it, it's just there's not even a single ounce of journalistic integrity. They were It's almost as if they had their idea and then they were cherry picking the data to support that, opposed to like actually looking into the situation. And for example, they were citing all of this data that was intentionally outdated. They were pulling numbers from June when there's updated numbers in August, such as their monthly active users. They're like, okay, there was 35 million. Well, in August, we knew it would grow all the way to 78. So that's just a quick example of it. And then they were really getting into other details of certain creators. They're like, well, look at that. They're posting or they're not posting at all. And really, it was the creator called it grotesque. And I 100% agree. They're like, look at this creator is not posting at all. And in reality, that creator's facing a very difficult family decision that's publicly known. And they're saying, okay, we're going to be posting. We just have to wait to start our show until later. So it was one of these things that 30 seconds of research or even reaching out to the creator, reaching out to Rumble would have clarified it, but they chose not to do it because once again, they came in with this idea that we want to short it and we're going to figure out everything we can that fits our particular narrative. We've seen this before. It's just another classic short and distort campaign. And fortunately, FinTwit is getting a lot quicker at recognizing when they rear their head and saying, okay, you're full of BS.
Yeah, one thing I've said, and I feel like, it doesn't get talked about too often. We like to consider ourselves in the age of information, but I've really talked about it that we're more in an age of misinformation. And
Yes.
it seems like the misinformation sometimes can get grabbed on quicker than the true information, right?
Mhm.
And I feel like, this is the battle that we're in now. And I feel like, some people out there are trying to battle for the truth. And then some people out there are more than willing to give opinions that just create more conflict overall.
Yeah. And I would be the first to say that I think maybe it's just a part of being human, human psychology, money on the line. It does cut both ways. I think there's sometimes where there's people who cherry pick what they want to be the thesis against you. And then also, I think it's easy as a human to cherry pick what you want to be true. So it
Yeah.
does cut both ways. Like, I'm not meaning to just bash one side, but like, I think it's just honestly human psychology, money's on the line, and everyone wants it to be that home run like type of a trade, and you get hopium and copium and then you get lying on the other side. And it's tough because in the world of the market, it really doesn't matter your emotional state or your opinions because it's run by math, it's run by numbers. And at the end of the day, the market, if you're not seeing reality properly, the market will make you recognize it very, very quickly.
Yeah, and the one thing that I would say is, from a short report, and I bring on short reports all the time, and the main thing that I do is I do my own research, even when
Mhm.
as I'm reading this short report. Right? Are they kind of aligning to what is actually being put out by the company? Right? Because sometimes, I mean, you read these short reports, and I have to say, sometimes they become more of a personal attack than an
Mhm.
attack on the company. And I feel
Yeah.
like that's really, I mean, that's not beneficial for anybody. I mean, we can all try to call out each other's characters and try to point to each other's flaws, but the key is truly is, are they kind of, going against their investors? Are they not being communicative? Are they not being transparent? And it
Mhm.
seems like Rumble in this case is being truly transparent. I know that the short report brought up some questions about the concern of the growth of the user traffic. What do you
Mhm.
what do you think about the growth on Rumble?
So if I'm remembering the write up quickly, it was about more of like the revenue, like trading at whatever multiple of the revenue. But this is also one thing that the leadership team of Rumble has been very specific in their SEC filings of right now. They are focused on growing their users and also focused on growing their user consumption. And this was in their report of when they did their whole SPAC deal of their growth is impressive, like time adjusted with TikTok they're growing at a very, very rapid pace. And they've been like very frank with the public about it. So I think it's more of they are sticking to exactly what they told the public they're going to do. And later, when it comes time to focus on revenue, they're going to figure out the appropriate ways to monetize their user base. But really, they're taking that same page of TikTok. Right now, it's user growth and user consumption. And that's what they're focusing on. And I applaud them for following through on exactly what they told us they would be doing.
Well, thank you for clearing that up for us, Matt, and coming on and talking about Rumble. Now, let's get off of that topic. Let's talk a little bit about what you're seeing in the overall market. It seems like it's just tough. It's tough trading out there. And, I think that, I think we all want to see a bull market come back, but how long will that take? Is a true question, right?
Yeah, I mean, I could definitely kind of tie this together with both. First of all, it
Yeah.
sounds like maybe a little bit we're bashing on shorting. To be very, very clear, I'm not inherently against shorting. I am against manipulative shorting. So with shorting, I mean, maybe you think that Snapchat is going to have awful advertising numbers, maybe say the worst quarterly sales growth ever, and you think it's going to drop 25%. That should be something you take advantage of. Or maybe the journalistic part of shorts, searching out something like Luck and Coffee. I do believe there is functionality for shorting within the market because, hey, you should be able to play the market how you want as long as it's above board. Coming to the market right now, the overall market, I should say, I have to admit, short term, it's tough. Volatility is high. I mean, we have the UK Prime Minister stepping down. We have bonds dropping as quickly as they can, yields screaming higher. The Forex market is going crazy. So clearly high volatility, but I think it's all being led by the Fed right now. And this isn't some brand new ideology. I mean, we always have the saying, like, don't fight the Fed? What is the
Yeah.
trend that the Fed is creating? And for all of 2021, when they were doing quantitative easing and they were pushing that total $8.9 trillion into the economy, it was ripping, ripping, ripping. And then when we got those FOMC minutes, I believe on January 4th or 5th, they said they were going to quantitative tightening. And ever since then, down and down and down. I will not be switching my medium term analysis of the overall market until the Fed is done with their Fed rate hikes. I mean, in early November, we're going to get 75 bips, most likely 50 bips in December, most likely 25 bips in January, based on the current bond market. That's what we're looking at. I don't see things calming down until they're not going to pivot. I mean, every time the market gets this idea of like, oh, they might pivot, it rips for a little bit. And the Fed comes out and they're like, seriously, man, we are not pivoting. Like, please calm down with that. The market's like, oh, okay, maybe not. And then the market sells off once again. I think it goes this way. We're going to get probably 3 more rate hikes. And then I think we're going to end up coasting at that level until eventually inflation comes down. In the medium term, I think maybe there could be some seasonality. There's the Santa Claus rally from now until the end of the year. It is the most bullish time of the year. So that could happen. But also, there are big global tensions going on. So seasonality is bullish. Global situation makes me a little uneasy. But really, what makes me uneasy is how catastrophically bonds have been selling off. The bond market is ugly. And I get it. As soon as you say bonds, people's eyes glaze over. It's boring. People don't really talk about it.
Bonds.
But it's so, so important right now. So because of that, especially just where we're going with rate hikes, I think there's more pain to be had. I don't think this sell-off has actually bottomed. But once again, just to clarify, in the long term, I think it pays to be a perma bull. Long term, I'm looking at
Definitely.
this dip as the best opportunity to buy whatever you like. If you like Apple, Microsoft, Tesla, whatever it is, you are shopping on discount. But just be prepared sometime over the next 6, 8, 12 months. There's still most likely going to be a bit more pain, at least in my opinion. But that's fine because you have to know the trend you're in. If you're looking out for the long term, you're still A-okay. We're shopping on discount.
Hey, 1 year of pain for 5 years of gains won't be too bad. That's the
I
way that
like
I can
that.
think about it, and it's tough. And it's in a tough environment. Now, one of the oil trades is really one of the things that I've been keeping a close watch on. I know that you've been also watching the oil markets.
Mhm.
What do you feel about some of these oil stocks? Do you think they have still some room to run?
I really do. And this is getting, I guess, more of a political driven trade right now. At one point a month ago, the floor was in at 80. Now the floor from the administration is being put in, let's call it like somewhere between, I think, 67 and 72. But basically, the Strategic Petroleum Reserve, it's just getting decimated. And that's probably a political ploy as we're getting into the midterm election cycle here. And make sure, hey, if you're watching this, make sure you're registered to vote regardless. It's getting complicated. We have OPEC, particularly the Kingdom of Saudi Arabia, who they're doing what we're doing. We're trying to do the other side, and we're in an election cycle. The way it all boils down to me, I think the high odds play is that oil is going to the upside. Yes, you could play directly through petroleum. I know the distillates, particularly diesel, is ripping through the roof. But where I've loaded up and what I'm personally invested in is Occidental. The reason I picked that out of Chevron, Exxon, Devon, the way I got Oxy is just because it's being backed by Warren Buffett. The fact that he's been loading billions and billions and billions into it, it has to make you, like, I don't know, question why. And then after doing a little research, not does it only just get general exposure to petroleum, but also I believe its technology is a little bit superior in the world of carbon recapture. So you kind of get that political push too of if the government forces that upon oil companies, well, Oxy might have that tech that's already in place to really benefit. So we're getting exposure to petroleum and then carbon recapture backed by Warren Buffett. And I'm also inherently bullish on oil. So boom, that's how I ended up with Oxy.
Well, I'll tell you what, you don't go wrong a lot of the times fighting Warren, right? I mean, if you're on his side, a lot of the times you're going to win. And it seems like Oxy has definitely held on, and he's bought so much every time it gets to around that 57 price point. Just seems like he's just loading up. So it's not a bad outlook to have on Oxy. And I do think that, with the reserves kind of being, washed out, eventually they got to be replenished, right? And that's going to drive some demand, right? The way that I'm thinking about it is, are they maybe looking at that after the midterm? They're like, yeah, let's get these all out. Let's get the midterms through. Then maybe we can start replenishing these reserves. We're going to have to pay attention to that. But thank you for coming on. Like always, Matt Khors, I appreciate you coming on. And I do want to give you some insight. Looks like someone from the chat wanted to at least throw you a super sticker even on here. Tommy Touch telling me I haven't been able to super chat on your page. So wanted to at least give you the insight. They love you out there, Matt. And
I appreciate
you coming on, my friend.
Yep. Thanks for your time. Have a good one. Enjoy your weekend.
Take care, Matt. And get one of those sup ducks. Look them up.
I will. I need a sup duck. I'll put it on my to-do list and we'll get one right on the microphone.
Sounds good, man. Have a great one. Take care, Matt.
Too.
All right, there you have it for our interview today. We went a little overtime, so do me the favor, hit the thumbs up. I appreciated Matt coming on and giving me the insights to what he sees from Rumble. And of course, also giving us some facts that he's seeing, of course, off of the short report that was put out by the Bear Cave and how it could easily be disproven. Of course, we'll just kind of keep watch to see what happens in that situation, how it plays out in the next couple of weeks. I will be back like always at the close. That's going to be at 3:30. Don't miss it. We'll just keep building here on Stock Market Movers. I hope that you guys enjoy the way this show runs. Quick headlines, expert opinion, and of course, keeping you guys in the informational edge. I'll see you next time right here on Stock Market Movers. I'm your host, Money Mitch, and have a great weekend, team. I'll see you a little bit later on At the Close if you guys want to check out what happened in the intraday market.